will take their income.
But income will be.
Yeah, there's certain parameters. It can't just be like your contract, if your PR is expiring within the next 6 months, then it's going to be hard to push it through. But if it's like
Work permit is expired.
yeah, if your work permit is expiring, or if sometimes people have a work permit, but they have a contract job, it will take their income.
But income will be.
Yeah, there's certain parameters. It can't just be like
If the work permit is expiring in next 6 months,
yeah, then you might have some issues. If we can't get to say that the contract or the work permit will be extended, then it's okay. That's good. I can just do it like that. That's fine. All right, so I'll just go over a little bit about myself to start off with, some market updates, what's going on in the industry at the moment, a little bit of value add, like how I kind of work and how I can help and support you guys, and then some of the upcoming changes that we were just talking about. There's a couple more that I'll kind of go through there as well. But I work at Active Lending. It's a family brokerage of ours. We've had this since 2016, and I've been a broker for 2 weeks, but I've been an agent for the past almost 3.5 years. Primarily, I do.
you can start this one. Yeah, that's something.
We don't have to do the presentation mode. We can just go through it without the presentation mode. Might be
Easier.
Might be easier that way. Yeah.
Yes, 1 second, please.
I'm gonna keep changing.
Keep it.
Is there an option to open with PowerPoint? Maybe it just works like this. I can do it like just like this. Does it go up and down from here? Oh, okay.
Oh, yes. No, sorry about that.
No problem. Okay, I do come back from a consulting background. I used to work at Deloitte and KPMG, so I was in a sales and a client-oriented service there. So kind of just bringing on the experience over to this side. I do primarily just work on residential mortgages, but I do have a little bit of experience working on small commercial units and such as well.
So small commercial units mean any
Meaning like office space, anything in like a warehouse type that you're gonna rent on forward. Not too much on the business side. On the business
not
side.
on the business, actual property.
Actual property, yes. So it could be a commercial property. Yeah, so it could be a property like this, that somebody wants to invest in, and then you rent it out or you keep it as an office and stuff
Like a warehouse.
just like that. Yeah, yeah, it's not on the business.
Not a small business, like if someone is buying a restaurant and these premises not.
Yeah, I mean, I've done a couple of deals, but I'm just not saying that I'm an expert on that side. But I can always help you, guide you. I know some people and stuff as well that I can point towards from that side as well. I do very much so strive on providing clients with good experience. I think overall that is pretty much the goal of us to keep the client happy as we get the deal done, right? So I can do two ways. I can do fully online, everything from taking in the application to document collection to the signing process can be done all online, or it can be done at my office, or we can do a hybrid and a combination of both, whatever the client is sort of comfortable with. Obviously, I think in our business, we always try to be catered to the clients, be available after hours, before hours, because a lot of our clients do 9 to 5. So just being available from them makes things not only easier for them, but easier for you and easier for me as well.
And biggest issue is even we were discussing before this meeting, like to get the documents from the clients.
Yeah.
It's like they know that my salary is 100K, the other person's spouse salary is 70K. Now we know 170K is family income, and these are the debts. This is my car payments, and how quickly you can give them a rough estimate.
Yeah, a rough estimate. I try my best to, if you say you give me a call, I'm available. I can do it within 15, 20 minutes, as long as all the numbers are sort of known, right?
Oh.
You call me in the morning, maybe I say I have time in the afternoon, I'll call you back, and we can get that done within about a 30-minute time frame, as long as you have the numbers, right? If you want me to give you a very precise pre-qualification, not a pre-approval, but you want me to review the documents and all of that, I do try to get everything across the board in about 24 hours. So I have the documents, as long as I have the documents, and I can look at the exact numbers and give you very precise details, right? Because if you just tell me word of mouth, then I note the numbers down. But if you make 156 and then we put per people like I make 60, you're gonna have that little bit of a gap, right? So as long as that is understood, it's good. But I do say that depending on how you want it done, 24 hours with the documents, I'll get you back a solid number in terms of, and we don't have to do any credit checks or anything at that point of time, right?
And so let's like a three-way call with the client or Zoom meeting.
Yeah.
So can it be done after 9 p.m. or on Sunday?
Yeah, it can be done, of course, right? I think there are obviously times where people have obligations and stuff, right? But as long as I have a heads up notice, I can make myself available. That's not a problem. It might be hard if you call me just at 9:30 randomly. I pick up if I can, right? But if you tell me that, hey Harry, Thursday I need you 9:30, you tell me today, I'm good.
So that's like if you call double tap 2 times, 3 times, then Harry might pick up.
Yeah. But I'll give you a call back, or I'll be available as much as I can, right? Sunday, no problem. Sunday, anytime. It's just sometimes, I do play basketball on Wednesdays sometimes it's at 8:30, sometimes it's at 10:30. So I just don't know when I'm gonna fit in. But if you give me a heads up, I'll be available there, no problem. And I think it's mainly important as well, as especially if you're going into some sort of a bidding war, and I know it's not happening as much, but if there are cases like that, you can let me know that, hey, offered is going to be now, or we're going to be going into a thing. So I'll be available, and you call me, hey Harry, can we go, $20,000 more, or how much did the situation?
That's the point, like we need.
Situation change, right? So I can go into that conversation with for sure. And then obviously all about providing solutions and options to the client and being consistent with updates. A lot of times I get the documents, the file is submitted, I tell you, hey, things are looking good, but nothing happens for 2 3 days. Sometimes it really just doesn't happen, right? But I'll keep you, hey, nothing is happening, but nothing or anything to be concerned about either. We'll move forward as soon as I get an update and stuff from you. And then I obviously also want to just hold the same professional standard as you, right? I get a lot of people and clients to me. They're like, oh man, I'm this mortgage broker I dealt with, or a realtor will call me like, hey, this guy's not really helping me out anymore, right? So I do strive to make sure that I hold the same professional standard as you. And then the last thing here is just client retention, right? Because not everybody is ready today. And I've closed 2 deals last month where I met somebody in February and March timeframe, around like the spring timeframe, right? They weren't ready, but I worked with them because usually they need some sort of a credit repair. They're waiting for their job to improve. They're waiting to save money, or they're waiting for down payment to come from somewhere. So just guide them and make sure that if they are eventually going to be in a position to buy, it should be with us. But work with a lot of lenders. Of course, we have access to a lot of lenders. Not work with all of them all the time. My preferred ones in the bank space are TD and Scotia. But then I also do a lot of work with First National as well. They're an A lender as well. Ultimately, if a there's a better rate, clients getting a cashback, I'm always going to present that option to them. But if they do want to go with a brand name, that's up to them. It's their choice, and then we can take them to TD Scotia. Okay, so just quickly on the lenders. So obviously, I do work with lenders all across the board. So your A, B, and C. So your A lenders are your big banks, First National, anything that's regulated by OFC. These are institutional lenders. If your clients have less than 20% down, you are going to have to go with an A lender because it's going to be an insured CMHC mortgage. And then A will also provide you with the lowest of the rates, but that does come with strict qualifications, like we were talking about the stress test and such as well, right? And then obviously they have 1, 2, 2, and 3 terms. 5 years is the most common term, but as of now, the 3 year is also a very popular term as well. And then just a little bit later on, I'll tell you a quick strategy that we're using with clients to get them a better rate next summer, but still close deals at this point of time. And then your B lender, like Samsar was saying, anybody that doesn't have stable income, right? You have a business and then you're getting commission based, or you work part-time, or you have multiple different sources of income, the B lenders are way more lenient in how they will treat that income. Usually we can just show bank statements minus some of the expenses, and then we can gross that up to be the annual income for that one person. But in this case, you will require 20% down, but they do have flexible ratios. So on the A side, we're stuck with 39.44 GDS, but just think of these as numbers. But on the B side, we can push those numbers up to 60. So the higher the numbers, the larger your clients can qualify for in the mortgage space. And then also when you start to rack up a lot of investment properties, the banks start to say no to you, right? And then the option here is B as well. So if people are going above 3, 4 investment properties, this is a space that can definitely help them out. Usually on this side, you see 1 to 2 year terms. I have some clients that I've closed deals for. Usually these are your dentists and self-employed, well-off people, where they say, well, I have to pay myself taxes to claim income and then go on the A side. I rather just pay a little bit more in interest rate and just stay on the B side for the foreseeable future. So it works for those people as well, because business for some people, you either got to pay tax or you got to pay a higher interest rate, and only matters when you're actually buying a home. And the C in the private space, obviously over here, we're only concerned about the equity within the property. So we don't have too much concern about where the down payment is coming from. We don't have too much concern about what the income of the individual is like. So if we rely on equity, then we have to rely on an appraisal, because that's going to be the main deciding factor of what the property value is. And especially in today's market where there's a lot of speculation of what's one house worth, what's not, the lenders do heavily rely on the appraisal in this case as well. And then we can do open terms, so you can take a mortgage today, pay it back off on Friday. But if you want a little bit of better rates, depending on the situation, when you want to get out of it, we can do a 3-month close, we can do a 6-month close, or a fully year closed as well.
So we can take it fully open.
You can take it fully open, and usually works in quick situations like you have to close the property, your funds are coming from an else place, but you just don't have, a certain situation of why you're not able to close, but you have something like in the foreseeable.
Like you're selling a home, it's not so
yes, yeah, that's bridge. Yeah, we can do a bridges and stuff as well. I'll show you that a little in a sec. Yeah, it's a temporary solution. So lenders will usually always ask is, how am I going to get my money back, right? Because these guys don't want to give you money for 5 years. They usually want to give it for a year or 2 years, and they want a sound explanation of how they're going to be able to get the money back. Usually at this point of time, people are going to be selling their properties, right? Or you're going to be doing construction and you're going to be refinancing. So, we can always make things up, or we can work with the client to see what's the next strategy for them. And then second mortgages obviously also falls into the private space.
So quick question, like, I have a few of the mortgage brokers, they are now saying that if I have 35% down payment, right, or 40% or 50%,
yeah.
So they can get directly from the A lender, or they have to go with the B lender?
Well, like on the A lender, you're still going to have to qualify for the other 50%, right? So there are some equity-based programs. Let's say if you have a lot of money left, right, for your qualifying, let's say you only qualify for $250,000 mortgage, right? But you have $500,000 in your savings, right? So then I can use dollar to dollar after that to qualify you for $500,000 more. But you can't use that $500,000 for the down payment. You can use a portion of it, but then that'll decrease as well. But you would still have to qualify for in one way or another on the A side. And on the
Okay.
B side, it would just be more lenient. You
Right.
probably wouldn't have to have as much income to qualify for as much.
Okay, but how much truth it is that, because if somebody is saying to me that if I have 35-40% down payment,
Yeah.
then I don't need the strict qualifying criteria for the employment, right? But it doesn't matter whether I am employed or not. Is it true or not?
I would say that is not true, because you would still need to, because if you're qualifying for a mortgage, you still need to have some level of income, or you need to have some level of assets that are producing you maybe some sort of income.
Okay.
Right? It's not just that I have 50% down, but I don't work. Right? Let's say you buy $1 million home, but you have 50% down, but you don't work. The bank's not going to give you the next 500.
No, but the point is that I am not saying that I'm not working. Somebody recently told me that if you have around 35-40% down payment, you don't need to submit the documentation for your employment.
There is
I was also a bit shocked at how it is
there is
possible.
a program new to Canada. If
Haan ji.
you're less than 5 years in country.
हाँ जी, हाँ
And
जी.
second thing is like you have to show your projected income. Yes,
Okay.
one of my clients, she bought a house last year. Her notice of assessment was only 15,000. She got a house like it was for $1 million, 650,000 was the loan amount. And the way like she showed it, because she was giving her bar exams. She was going to be lawyer next year. And then they took the average income. Like even the notice of assessment wasn't there, but they took a projected income.
Yeah, but that only works in like, your lawyers, your dentists, or some professional things. And but if you just have a normal, some sort of a job, then it'd be hard to see how you wouldn't have to submit any
That's it.
documentation.
The other thing is that's like you had a business, you're gonna say that I can start doing the same kind of business, but I can open a restaurant. But all those things is like based on your past profile. And but the most important thing is like you have to have 35% of payment from your own sources and plus 1 year payments.
Right. And I have two more questions related to this. One scenario I have a client who was not working since last almost 1.5 years, right?
Mhm.
So he has almost zero income tax filing for the last almost 1.5 years.
Mhm.
So now he has started a full-time job, and now for the 3 months he has to do the job, right?
Yeah.
So how much chances are that he can get a mortgage this year? Because you want the previous 2 years record also, right?
No, so if he has a full-time job and he's not on probation, we don't need to consider any previous employment.
But he is on probation for 9 months.
9 months, so technically we would have to wait the 9 months. But
Oh,
then there are ways though. So what you can do is 9 months is very long actually for our job as well. One thing is you can request the employer to take it out, right?
okay.
The other thing, because until you're on probation, they can just let go of you. They don't really need any excuse or anything like that. They can just one day you can show up to work and they can be like,
Oh,
hey,
yes, yes,
we
you're
don't need you, right? So when you show that to the bank, they say this is not 100% income is not there yet, right? Like
right.
he might get let go. But when you're on probation, then you have to go through a whole process of letting go of somebody, right? So that's the main thing. So the best way would be to get the thing shortened out, and I've seen that happen with people as well. Or if the closing is after the 9 months, but they can purchase now.
Okay. But if there is no probation period, then they're fine.
If there's no probation period, then we're all good, and there's no issues with that.
Okay.
Yeah.
And one last question, like if one client has 5% down payment,
Yeah.
their income is only 75, husband and wife, right?
Yeah.
So they are looking for a 600,000, around 5% down payment, 6 to 700,000 mortgage. So, and that too from the A lender.
How are they gonna pay the mortgage?
Yeah, that's it. No, I'm asking
I
that
think
it is not possible from the A lender, right? Only B lender can do that.
No, B lender, you need 20% down.
Okay.
Yeah, so if you have less than 20% down, and then the other thing is now it's like a fully CMHC insured mortgage, so it's not only the lender approving it. Lender's gonna look at all the documents, and so it's CMHC gonna look at all the
Right.
documents and stuff as well, right? So if we yeah, but we just have to see what they would qualify for, and it'd be hard to press. And then you're right, like their mortgage is gonna be super high.
Even if the bank gives the mortgage, then they have to make the payments.
Right.
They can qualify for 400.
Yeah, because for 600 something, they're gonna have 30%, 30,000 down, and now they're gonna be taking a huge mortgage comparative to their income. Okay, so just a couple updates. So obviously we saw 50 basis points drop last month. That brings down the prime rate to 5.95. And then inflation is below 2 finally at 1.6. That doesn't mean things are getting cheaper. They're just only getting more expensive by 1.6% and not by 8%. Right. And because there are a lot of people I talk to, they're like, oh, inflation is down, but the things are not getting cheaper. It's like it's still inflation because it's a positive number, right? And then mainly the gas prices was one of the big reasons why it was below 2, and that means good things for the people who have a variable rate mortgage. They've seen a significant change, about several $100s since the rates have started to drop. One of the not good things is though that the employment rate is on the rise, and it was at 6.5%. It was almost 1% lower at this point last year. And then we're still seeing some people with issues to cash flows when we're talking about rental properties. People are still putting out a lot of money out of their own pockets, and the rent is also getting cheaper as well. Because there's a lot of properties, especially like condos and stuff. There's a lot of them, lot of them out there, right? So there's the inventory is quite a bit for sale and for rentals. And then, yeah, we've definitely seen some activity since the rates have kind of cut down. How much of that activity will sort of translate, we'll get to know in the coming months, right? But we're definitely getting more calls, more pre-approvals, and more interest there. But the other sentiment that I do see from people is that, well, the rates are coming down, so maybe I will wait, right? And then get a cheaper rate as it goes down.
But Canadian dollar is weaker now. Rate cut.
Yeah, due to the rate cuts, that will happen. But if the Americans, oh, there you go, that's good. If the Americans cut too, though, then it should sort of level out, right? So basically, higher rates, it's just hard to get a mortgage at the banks, right? So we're seeing an increase in B and private mortgages, of course, and we're also seeing an increase in bridge financing. Mainly, what's happening with that is people are putting their house on sale, and then they're buying a house, but then they're, as you know, the houses are sitting on the market for a lot longer now, right? So they're not able to sell that house. So if you want to do bridge financing at the banks at the A side, you have to have the house sold, and then you have to have bought this house, and they'll hold it. But if you don't have the house firm sold, then you have to go private, right? But the solution is still there, right? And usually that's temporary. They're going to put up one mortgage on both blanket properties, right? And then when you sell that house, you take the funds, and then the goal is to move to a traditional mortgage. And then we're also seeing people co-signing, right? That's one of the ways how you sign, how you come over the income issue. You can just get somebody, you know, whether it's a family member or a friend or somebody like that to kind of co-sign with you to bring up the income, right?
The second one, home equity, my second mortgage.
Oh, sorry, did I skip that one?
You say, look,
Yeah, so sorry, I skipped that one, my bad. Basically, home equity, the biggest way of getting it out or the most efficient way of getting it out was HELOCs, right? But now your HELOC is at prime plus 1 or prime plus 0.5. So then you have to qualify again for that, right? And now you can imagine qualifying at 9% or 8%, which is just kind of crazy. So people do need to access it. We go the private route of providing them a second mortgage, where again, it's all equity based. We don't have to worry about income or anything like that. So if somebody needs, you know, $100,000, $200,000, they may not be able to get a HELOC, but it's better for them to get a second mortgage, pay off debts, or a lot of people are actually getting second mortgages on their primary home because their pre-construction home that they're closing, their appraisals are coming low, right? So how do you kind of bridge that gap? You got to bring that money out from somewhere. So second mortgages are popular for those, obviously debt consolidation and things like that as well. And then the greatest bank after Bank of Canada is the bank of mom and dad, right? You're getting a lot of people need that support to push them over for the down payment piece as well, and a lot of help coming from parents or family members as a gift. And then just quickly on a rate strategy. So this doesn't work for everybody, but if people do have good incomes and they qualify for a variable rate, it's good for them to take that. And then the whole point is that we're going to start to continue to see the rate drops, right? And then by next spring or maybe by next summer, we should have enough rate drops that the fixed rate drops to hopefully closer to or below 4. It's already close to kind of 4 in some cases, but it'll be below 4 and maybe even mid 3s. And then you switch from the variable to fixed at that point of time, and then you write out the fixed after that. So you don't have it. But if you think the variable is going to keep going down, you can keep the variable too. So it's a thing to kind of reevaluate when we get there. Because right now, if you take a fix, you're going to be looking at mid to high fours, right? And now you're stuck with that for at least 3 years or 5 years, right? Versus you pay a little bit more now, and then you get a nicer 3% rate, unless something kind of goes crazy. But that's the strategy there.
So the difference between the two is going to be significant, right?
Sorry?
The difference between the two when we switch from the variable to the fixed.
Yeah, it'll be significant as well. But the main thing is like it's going to be significant between taking a fix now than taking a fix next summer.
Okay.
Right?
Do we have to provide them a documentation to change it from variable to fixed?
No,
Like, do we have to again the same qualifier?
no.
The second one, you said the increase in bridge financing, right? So you say like if you have a house and then you bought another one, but this one is not sold, it's still, so they're gonna hold the mortgage?
They're gonna hold. So you're gonna bridge both of the houses together and get a mortgage on it.
It's not closed, but it's sold.
No, so it's sold. You have to on
It
the A
has to,
side.
yeah.
If it's not sold, we can still do it on
Still do.
on the private side.
On private side.
So, yeah, we can still do it. If it's on sale, it's even cheaper. If it's not on sale, it's a little bit more expensive. But if it's on sale, it's good. And then because that really works out because it's only a little bit of time that you need 1 or 2 months, right? There as well. So this is just the current rates sort of right now. So on the 5-year fixed, the ratio is 4.19. Variables obviously on the higher end, and then as you get into conventional, 4.5 almost, and then rental properties a little bit higher. And then the B lending the rate you're looking at starting from low fives to mid to high fives, and then C lending is starting from mid sevens.
Mid-7 is not bad.
Mid 7 is not bad. No, this used to be 999 about like in springtime.
But they would be broker fee lender?
Yeah, so and then depending on the mortgage amount, but usually it's like 1 and 1%, or if it's a smaller mortgage, then they'll do like 2 and a 2%. Okay, and then some other cool solutions, some on most of these things are on the B side, but we can use up to 40-year amortization. Larger their amortization, as I said, more of a larger mortgage they can qualify for, and lower payments they have. Some banks on the A side, we can even do 90% of the rental income. Usually they only take in 50%. So that's another thing to gross up the income to a larger amount. We can do discount mortgages. These mortgages are basically, sometimes they call them no-frill mortgages. They come from credit unions like Desjardins, Duca, and stuff like that. They do provide lower rates, but the breaking of the penalty is quite heavy on these. So if you know you're going to stay in the home for 5 years, first-time home buyer, it can be a good product there. Then no stress tests on some of the B deals, which allows you to qualify for a crazy amount more than you would otherwise. And then, like I said before, there's our companies out there as well that will help you co-borrow. So if you have 5% down, they'll give you up to 15%, but then they will also share in the equity at the same position. So when you sell the house, you have a 25%, they have a 75% stake, and you're responsible for all taxes and everything. So it's kind of a controversial kind of a product, but our job is to explain it to the clients, and if the clients are not okay with it, that's up to them.
So there would be any exit period for that?
No.
Like a minimum exit period?
No.
Can be 3 years, 5 years.
Yeah, pretty much. Then they make it go up to like if a person passes or if you sell the property.
So do you have a rent to own program?
Sorry.
Rent to own program?
So rent to own, I've only heard about it, but since I've joined, I haven't seen anyone do a rent to own program. Yeah.
Isn't that
Few
like
of
the
the brokerages
co-borrowing?
they're doing.
Sorry.
That's like the co-borrowing.
Co-borrowing is different thing.
Co-borrowing is a little bit more different. I think rent to own is where you start to pay rent, and a portion of your rent starts to go towards the down payment until then you're ready to purchase, right? And then a portion of that can be considered the down payment, and then you go qualify and you get a mortgage.
Yeah, because what I've seen is like the only difference is you have to put down 3%, as low as 3%. That's the rent to own that I.
The rent to own,
Yeah.
but then there's a accumulation part, right? Accumulate. So that accumulation's got to go up to at least 5%, because then you have to go get a mortgage after, and then you need at least minimum 5% anyways for it. Yeah.
I think that study is good for when your credit score is not good. But
Yeah, like if you want to improve it and things
Improve,
like
yeah.
that, yeah. But I haven't really seen anyone kind of
Not
take
that
it.
many options, but not that many options for renters.
Yeah.
Because you're going to be paying rent, and then you have to put another something $1,000 every single month to be able to kind of make up that down payment.
If you have a good cash flow, only then it's possible.
Yeah,
No, I have heard about this also, but the conditions which they put in, they are very harsh.
yeah,
Most of the time, they are not buyer friendly.
yeah. The co-borrower one?
No, the rent only.
The rent to own,
Yeah.
yeah. Co-borrower is something similar as well. Co-borrower thing is like people just when you leave the property, then you feel the hit because you have to pay the people back, and then you took the whole expense of keeping the property up to this thing, right? So that's where you can do it.
Co-borrowing, technically, it's a share, right? So you pay a certain amount, he pays certain amount, at the end
Yeah.
of the day, whatever the profit made, so it has
Yeah,
to be
it's,
split
but it's a
based on the
special
person.
agreement in a case where they have no say over the property and what you do with it.
Sorry, what?
They have no say over what you do with the property and how you keep the property,
Okay,
right? Like they can't, like if you want to tear down a wall, you go tear down a wall, right? Whereas in other cases where you have to get the permission of the other person as well to make any big structural changes and things like that.
Because in this co-borrower, it's the same equity share program, right? Because you get the ownership immediately when you buy the house.
Yeah,
But in that, it is very, I think, a lot of
Year or
things
2
is
years.
yeah,
ownership, and you get it, and that not also confirmed that you will get it.
in the co-borrowing, so there was, you say like if you pay 10%, they pay 15%. So at the end of the day, suppose I bought a property in 2021 or 2020, right? So the prices were sky touching. Now it is right here.
Yeah.
I lost money, so.
yeah. They'll take the hit with you as well.
They will take the hit.
They'll take the hit to the same point as well.
Same ratio actually.
Yeah.
Whatever they invest.
But if they didn't take the hit, then it was nobody would want to take it. So they have to, so they are relying on things. And I think because of that case, they may not entertain anyone who wants to buy a house for 2 years, let's say. They might want you to be in a mortgage of like 5 years and things like that, right? And they have a little bit of control in that case because they have the right to say if they want to give it to you or not. So you'll go through a whole interview process and stuff with them, and then you become like I submit your file first to them, and if they qualify you, then we go, and then they'll be like, go to these banks, and then we go to the bank. So they do dictate a little bit in terms of who, what, where, and when.
They have it, they're tied up with the specific banks actually.
Yeah. Mainly they're B-side banks, Community Trust and Equitable. Those are the two popular ones I've heard. Right, and then just some other ways I can help you guys. Like I said, 24-hour pre-qualification. This is with the review of the documentation. If your clients are a little bit talkative and they just want to talk about mortgage rates, interest rates, I love to talk to. So you can send them my way, or you can let me have a conversation with them where I can provide them a little bit more comfort or paint a picture for them. I love numbers as well. So if they want to run scenarios, I do a lot of rental sheets. Rental's slow right now, but I used to do a lot of rental sheets and just to see how the numbers and stuff sort of work, right? Because when people see the number, they have a lot more confidence in the situation we're talking about. And then if you have any opportunities for open houses or seminars that you guys want to collaborate, I'd be more than happy to do that. I have a lot of material like these slides and stuff prepared. But if you want me to come and hop on for 15-20 minutes on a joint thing, or if you want me to come to one of your open houses and sit there for a couple hours, more than happy to do so. And then I also do create some mortgage summary sheets as well. So if you have any listing and you just want to know, 10%, 5%, 20%, what would that look like, down payment, how much income and stuff is sort of needed for your knowledge, or if you want to distribute it to your clients, I kind of co-brand it. So you're more than happy to do that. And then if you have any questions anytime about anything in the mortgage space, always sort of happy to help. And then just the last piece here is just on the upcoming changes as we were talking earlier. So 30-year amortization for all first-time home buyers, all home buyers for any sort of a home, right? And then for new builds, even if you're a second property and stuff like that, you can do 30-year amortization as well.
For pre-construction.
For pre-construction, yeah. But first-time home buyers, pre-construction, or any other home after December.
So no GST on new construction.
Yeah, that's something that's proposed. So it's not something there. That's the conservative government is trying to say that they would get rid of GST. And I think any money that we can government money we can take out from the property price, it would definitely be helpful. But in a lot of cases as well, though, as people will still keep the same price and just try to cash in more, right?
But people will have more access to easily sell the property, right? Because if
Like on resale, there is no GST.
No, but because the primary residence and the investment property issue will
No,
be gone, right?
it's a different proposal. now we pay GST on the
New
new purchase homes.
Haji.
And they said like they are proposing conservatives that will split it out.
Haji.
There will be no GST if you're buying a house for 800,000, so you will be saving 40,000.
Right.
But the point is, who will be saving 40,000? Buyer or the builder?
Okay, that's another point. But Paji, but when we buy
They are not going to
construction,
pass on.
They will increase the price, that's all.
And the second thing is
Well,
like,
this is not an add-on, this is a takeaway, but will they take away from the prices, because it's not in nothing, like if the purchaser was like, okay, I pay it on top of this, then maybe, but otherwise it's gonna be on,
and the second is would the first time home buyer will get benefit or investors? They
investors,
should,
investors,
they are going to get the benefit.
yeah,
And first time home buyers, they don't, most of them, they don't buy brand new pre-construction.
right,
They should do it that they're gonna slice the GST from pre-con for first time home buyers only. So then it would work.
right.
yeah.
Otherwise,
Yeah, and honestly, it's there's a lot of politics going on, and then if the opposition says this, that's their motive.
Takes 20
What
years
will
to
they
change
do and how will they do it? You never know. But another cool thing is going to be the $1.5 million CMHC mortgage, limited to 1 million right now.
Qualify 1.5 million, you need 350,000.
Yeah, well, that's gonna get lower as the interest rates get lower, right? So that 300,000, maybe 200,000, but I think what you're gonna see is in a lot of these townhomes, that are flying around the 950 mark, I feel like they're gonna be like 1.1, because you're gonna 1.1, now you're gonna have all these other people that were not capable before because of whether it was a down payment and then CMHC rates are lower too, right? So qualifying for that is a little bit easier as well.
So that will increase the price of the real estate.
That is gonna stimulate demand, yeah, right? And then demand and then prices go up. So is it the right thing, wrong thing? I think it depends on whose perspective you're sort of looking from.
But I think your point is all automatically going to run parallel, right? Because very soon the prices of the townhouses, which are right now 850, they are
Yeah.
going to shoot up to 1.1.
So
950 is one will be.
if I look at it from a seller's perspective, right, and I have a price, I have a property that says exactly 1 million. Right now, if I put that property for 950, I have all these other buyers that don't qualify for 1.05 million. Right, so I might price it down just because I have to kind of sell it, but now I don't have that incentive to do so anymore. Right, so you can only see prices being increased for those properties that are kind of in the gray area rather than coming down. And then what happens to the people who are going to buy? Don't you think somebody who would have bought a property for 950 is now going to end up buying a property for 1.1?
Yeah.
They would have qualified for both sides, right? But then if you look at it from the seller's perspective, those people are going to be more on the happy end. And then we know the government likes to keep homeowners more happy than the purchasers, right? So that's a no-brainer there. And then CMHC refinancing. I don't know too much about this. I think this is relatively new as well. So if you end up, and then most better example I can give to you is those houses in Toronto that you can build a laneway property in the back. So if you do that, you can get up to 90% loan to value on a $2 million property. So if your property was, let's say, 1.5 million, you spend a couple $100,000 to put this laneway home, now it appraises at 2 million. You can take out $1.8 million from that property. Obviously, you have to qualify and everything, but the potential is there. And then obviously it's on a 30-year amortization. That's my contact info. If you guys want to get in touch, you can sign up for my newsletter. I kind of provide just information like this on a bi-weekly basis or whenever there are any updates. But yeah.
Thanks a lot. I appreciate
Appreciate you having me. It was a pleasure.
Harry, you have a business?
Yes.
You have been a card also, like having Referrals, right?
So Harry, regarding rental, okay. So what you are adjusting against the income?
I think it's more so just like trying to paint the picture of like how much will the property sort of need to be rented out.
So suppose I have a 3,000 rental income and 2,400 as my mortgage, including interest, right? Principal and
I think it's more so for like when you're trying to buy a property and you're trying to rent it out, and you got an upper portion, bottom portion. right? And then you wanna see basically how much do you need to rent those properties at to be able to qualify, how much, return you will sort of be getting from it. But if you already have an existing property and it's on lease for 3,000, that's just the number we plug in, unless we can change the number, right? But if we can't change the number, then there's really not much to kind of work through with it. It's looking at projections of like getting more properties. A lot of people sometimes, it helps more people that are like, if you're getting a fourplex, then, you're renting four, what do you need to rent all of those out to? What do your other rentals sort of look like, and do the numbers make sense or not, right? And then you can also do projections of if the values are gonna increase, how much are they gonna increase by and how long? So 5 years later, what is your projected amount of money that you'll sort of make, or after 10 years, what will you make, right? A lot of it is like kind of just projecting and looking at it, but you're able to make better guesses, you're able to make better decisions when.
Thank you.
Thanks a lot, Harry.
Yeah, no,
Thanks.
no problem. It was very nice, meeting you guys.
Thanks.
Do you guys have cards as well? That's okay. Okay, so
Okay,
yeah,
thanks.
thank you again, I appreciate it.
Thanks.
Bye, guys, bye.
So after, let's like we have a buyer and the offer has been accepted today, just like our confirmation that my offer has been accepted. What's the first thing we should do?
Congratulate the buyer that we are now.
Okay, congratulate. What do you think? That's like you had a buyer, you were working with that person for past 5 months, and now finally the offer got accepted. What's the first thing you would do after the offer has been accepted?
Yeah, go back to my condition, I have that. I have and get ready with those conditions.
Okay, so the very first thing you're gonna read the offer, but you have written the conditions, you already knew about it.
Yeah, if I know my condition, I work towards those conditions, so that at the end of the day, I should be able to close the problem.
Okay, so okay, what do you think, what you're gonna do, very first thing?
I
And one, which one?
Actually, make sure that everything signed and initially what should be, and then congratulate the buyer.
I have 2 kg laddu. Paji, yes, you're right. I think we should review the offer also. Sometimes they have changed few terms and conditions. And then they start like by accepting.
No, that's like before acceptance. The offer has been accepted, so what's the point to review it? It's already done.
So you have to work.
Okay, yeah, makes
So
sense.
that thing like we'll review it before we are going to accept it or before we are sending the offer.
Right.
Let's say I'm sending the offer, then I will review it thoroughly. Then I will send it, or if I got the sign back, then again I will review each and everything.
Oh,
Then
yes,
I will,
that's what I was talking
so that's prior to acceptance. But after,
Change price.
sorry?
Tell the mortgage agent.
So basically like there is a priority. So very first thing always in like if one is successful, first thing like we'll do which is important and due soon. The second one is important, not due soon. The third one is due soon, not important. The last one is not important, not due soon. So very first thing is like after the offer has been accepted. Now the biggest risk is buyer remorse. Buyer's remorse. Now they're gonna get cold feet. This is normally it happens. Like almost 50% of times it happens, and 25% chances if you don't handle it properly, they might back out.
Because I have seen that if the offer has been accepted, sometimes the buyers start feeling that I have given 10,000, 20,000 more for the property, right? Right, but
Yeah.
that is the remorse.
So Arjun, like we were just going through like this the same thing we were discussing. That was the first step after offer has been accepted. The very first thing is that we have to handle buyer's remorse.
Yeah.
Like even before like I send any documents to the lawyer or I start working on the conditions, anything else. Very first thing is buyer remorse and how we can handle it.
But that's proper script we have.
Okay, so
Assure you that we are with you with every step, so you don't have to worry about it. Whatever help you need, we'll be there with you.
and what are the types of buyer's remorse?
They always think that they paid more
Okay.
and they didn't buy the right house. There is some better houses available.
Yeah, so yeah, exactly. So there are like two main types. One is internal buyer remorse, which comes from their heart, their mind. And the second one is external. External is from all the relatives. They're gonna bring the buyer remorse, and the other one is the internal. So I have to handle both. Very first call, I'm gonna call them, or if they're with me, then I have to handle it because I have to help them out to get into their new home. So how are we gonna handle the internal?
I think that's the same which you were talking, that injection, right? That is the same one.
Okay, so like any idea?
So congratulate them.
Yeah, congratulate, yeah,
You're gonna
definitely
be
do
the
that.
one that's
Yeah,
gonna
yeah.
telling them, hey, I think you made a great choice.
Okay.
You won over so many other buyers, so your offer got accepted. Though
Yeah,
that's
that's right. No, that's the like.
You
that's
have bought the
perfect.
house in that neighborhood where a lot of people don't buy the house, right?
So yeah. So I have tried different type of scripts, but which is most effective is like you have to go on their level. If they're first time home buyers, then I will say, Mr. and Mrs. Buyer, congratulations. You have got the house. And now when I bought my first home, I couldn't sleep for 3 nights. And tonight, if you have a good sleep, it means something is wrong. If you have restless night, it means that's perfectly
That
fine.
means you're normal.
You are normal. Because we know like now they're gonna start thinking that have they paid like 20,000 more, or if the neighborhood is right, or if they are ready to buy a home. So many things gonna come. Very first thing I'm gonna say that Mr. and Mrs. Buyer, congratulations, we have got the house. And let me tell you one thing. When I bought my first home, I couldn't sleep for 3 nights. Now tonight, if you have restless night, then it means like if you have like sound sleep, then it means there is something wrong. So like whenever like even if you can go back when
what
you
if
bought
they
your
do get a sound sleep? You just
no, they will not.
something.
No, but we have already covered the objection, right? Our purpose is to cover the
Yeah,
objection.
I'm saying that like if you have a sound sleep tonight, it means something is wrong.
Reverse psychology.
If you have like different thoughts, means there is some you're okay.
So like again, if we go back to this, so we should know like mortality, like what kind of person he is.
Yeah.
If you tell me I bought a house for $1 million and you're telling me you're not gonna have a good sleep, obviously I'm gonna like not having. But instead of that, if I would say like a month late before you're a renter, you have no dignity, you have nothing, this, now you're a owner of this house. Does it matter you are here or not, your family would be residing inside this house. But if I tell them like you're not gonna sleep tonight,
No, like see, like the problem is like it's like if they're first time home buyers.
Yeah.
99% of times they will be nervous after they're getting offer has been accepted.
They're reluctant to put the deposit also.
Yeah, they will be reluctant to put the deposit as well tomorrow. Pretty high chances. So now, like, first thing is I'm gonna say that okay, when I bought my first home, I couldn't sleep for 3 nights. If same thing happens to you, it means it's normal. Any thought which comes to your mind, doesn't matter it is 11 p.m., 1 a.m., midnight, right away your job is to call me. I will answer it. Because I want to make this process like smooth. So
Yes,
right way call. So this is the first thing to handle. It's gonna handle internal buyer remorse. Now external. How we can handle it? Like when the moment they're gonna call their relatives, they're gonna say, well, when we bought a house in Brampton, there is so much crime.
So much problem.
Like like this is the time to sell the homes. And do you know the market? It's not good because everyone is expert. They don't want them to have a property. So how we can handle the external
We get a list of the relatives and call them all.
so I bought a car in 2010, I think.
Huh.
So, and there were so many guys that they come, oh, why did you buy this? How much did you buy this? Oh, this is wrong, this is not. Then there was another friend of mine. He said they never ride in a rickshaw. Rickshaw. So why they're talking about it? Sometimes you have to handle it.
Yeah, so how we gonna handle, like, how we gonna keep my buyer away from all those relatives?
I will listen all his objections, his, friends, relatives, whatever he's saying, right? And then I will ask him, did you find your dream home or not?
Okay, so the easiest ways, that's like before the offer was accepted, his relatives know that he bought a house? His house wasn't bought, and now you have to avoid that he don't have that. Let's say the offer is conditional. I will say, Mr. Buyer, the offer is still conditional. And sometimes there might be minor issue with the bank, or sometimes we're gonna go on home inspection. We might not end up buying this home. Until our dealers firm, don't tell anyone. If you if you're going to tell them, and after that next week you're saying that, oh, I bought a house. Next week you're saying that I haven't bought the house. They're gonna say so many different things. Best thing is wait until we go for home inspection and our mortgage is done. Don't tell anyone. Only it should be a secret.
That's a good way.
Otherwise, like now, it is their benefit because especially in our community,
Yes.
they're gonna say that, oh yeah, so I'm gonna to my brother-in-law, if I tell him right now that I bought a house and if I don't get the mortgage, like next month I'm going on wedding, they're gonna ask, like everyone would know over there.
The conditions have to be fulfilled.
Yeah, that's right.
So once is
Like, just give them their benefit. Tell them that, like, don't tell anyone
Right.
because we are not sure that we are going to go with this house. So this is like the very first thing I gonna do this thing like, with them.
The buyer that I had a few, where she felt she couldn't tell anybody anyway. I think you have to tell her that.
Yeah, that most of them.
She didn't want to tell anybody until it's 100% firm. She got the key.
Yeah, that's right. So first handling the buyer, remorse, and also congratulate. Yeah. So what's the next step like we'll do?
Importance and due, most important. and due.
Okay, so what like I have handled the buyer remorse and also I have congratulated them. So what's the next step?
deposit the buyer.
Deposit the buyer. Yeah, okay. Yeah, that's
Because
anything.
that is the first step, right?
No, first like is even before like if the offer gets accepted, they might give deposit tomorrow. So yeah, I'm gonna handle remorse first and deposit will come tomorrow. So
Deposit is going to be, the offer has been accepted, deposit is there. But I think next is that we should book the home inspection, right, as soon as possible.
okay, so let's say like now I got the offer, I handle the buyer remorse, and they have given me deposit as well. And what is most important if I book the, like, you have to any task first you have to see that what I can do to generate more business.
Okay.
Handling the objection, it is not going like booking the home inspection. Yes, it is like it is due soon,
Right.
but it's not as important as generating more buyers because otherwise you're gonna only stick with one transaction. If you want to do multiple transactions, you have to you have to start prioritizing your task. So second one is after like deposit has been given and I have handled the buyer remorse. Yes, I have to send the documents to the mortgage person as well. I have to call them as well. And those are the housekeeping stuff. But most important thing which is I have to do as soon as well is update your social media and market yourself. Otherwise, you will be so excited that I'm happy I bought the house. Then I have sold the house. Then you're gonna start there. So update your social media profile.
Secured, right? That's what
You can do secure. You can do. You might end up doing like video, whatever you feel comfortable, but ads on all the platforms.
right.
So what's the next step we'll do?
After this,
Yeah, after this.
That's for referrals.
Ask for, yeah, the referral, like we're gonna ask exactly. So we are asking from day one. Yeah, which is good. Like anything else like which we should do after this? Client testimonials. The reason is, so what's the reason like to get client testimonial even before Not even before closing, even before like firming up the deal, even before the
Because even if the deal fell through, right, but you have got the testimony for your success.
yeah.
Most important next. Oh, CRA.
If
CRA, right?
the deal doesn't go well, they cannot bad mouth about you probably.
Not-
Even if you have done so much of good stuff for them
Yes.
initially.
Exactly.
No,
So
because
many-
initially they are very excited, right?
Yes, that's
About your,
Yeah.
whatever you did for them.
Yeah.
yeah, they're excited as well as there are so many different parties involved in transaction. The buyer, seller, buyer's lawyer, seller's lawyer, insurance company, and movers, utilities. If anyone does a shitty job, blame will come on you. You are not going to get 5-star testimonials. So you're gonna get Google reviews as well as you're gonna get video testimonials. This is must.
But they can change the Google review after all.
It's their thing.
Best one is video recording.
No, like see, it's why they will change. If you are going to do some shitty job, then they will change it.
No, but
It was very shitty job only then.
no, but it's obvious that if somebody does the wrong
So
job,
if
and then
someone
we are
does a
also
wrong
blamed.
job, they might not give you 5-star reviews, but they will not change it.
Okay,
If you are always with them, they will not change it.
Right.
But like this
If
is
you're always with them, it means you're doing something good for them. That's why you're.
good. So next step is the testimony. So it was like not in our discussion
yes.
because I might end up selling 10. And the other thing is, you know what, how it helps getting testimonial. So what is the benefit?
Because we
It
can-
gets you more
So from whom?
from probably social media.
From everywhere,
Okay.
from
And-
buyer, from their relatives, from our social media platform.
Okay. But even important than that thing is like this client with whom I'm dealing, I'm pretty close to that person. And he gonna come back to me. Plus he gonna give me referrals. On average, every transaction, like which you are doing today, will give you one transaction every year for your lifetime. That's granted. That will only happen if you're getting 5-star reviews. If you're not getting 5-star reviews, it might not happen. The reason is now like it's in your mind that is must. I have to get 5-star reviews, and you have to give second mile service to get 5-star reviews. If you're giving second mile service, then it means you're gonna end up getting a repeat business and reference. Like let's say like if they're calling me, I'm not picking up the phone. Do you think they're gonna give me testimonials? No, I will not ask. My goal is that I want, you know what, this client who's sitting in front of me, I have to get 5-star testimonials. That is must. And to do it, I will do each and everything beyond service I have provided. Client adoption. You know what it is?
Taking care of all the needs of the client, right? As
So
and when
that is
required.
already my client.
And then nurturing the future relationship
So,
by being in touch with them at least 1 or 2 times in a year, congratulating them and giving them the gifts on some special occasions, remembering their birthdays, wishing them, sending them the cards.
no, that is after closing.
Okay.
That's a different, but this is like today.
Adoption from its name, player like you adopt. If you have done everything proper according to the book, you
No, that
adopt.
is your client. You're not adopting him. From this transaction, I have to adopt another client.
Yeah.
Which client?
So if we, like, it goes back to the river. So if I did everything good for him, it means I'm getting so much in lead generation from this guy. So
Yeah,
it means we adopted like a part of
No,
us.
lead generation is a different thing, like we're generating the new clients. But over here, I have sold a house. Let's say I listed a property and I have sold a house. I have to adopt the buyer who's not my client.
Right.
It is like I'm not going to do anything for this transaction, but for future. And if my buyer is buying the home, then I have to adopt that seller as well.
You mean that the buyer and the seller, which have already been adopted by somebody else, right?
They were not my
They
clients.
were not
I
my
have to,
clients.
I have to adopt them as. If I want to get one,
Yes, Paji, you are right. I have seen few realtors that when the buyer gets possession on the house they have sold, they send some bouquet or something to congratulate them also. That's
there
one
are,
way, right?
like there are so many things we can do. That's like if my buyer has bought a house, then I might print like it is very cheap. 1,000 boxes, small boxes from U-Haul, you can buy from $125, $1.20. Like,
Oh,
and I can get those customs as well. Like my logo is printed on them, and I can make a moving supply kit. That's like the boxes and the tape or something like that valuable thing. I can send it to that home. And Mr. and Mrs. Seller, so thanks a lot for accepting my buyers, my clients, to enjoy your home. And these are some supplies which I can, which might be helpful in your home. And now think about it. You think the listing agent have sent something? What is the percentage?
very
What are
less.
very less. Now,
No, yeah.
now you are the hero. Wait, so you are sending, they will say, oh my God. So,
This guy is very
We're
good.
allowed to do that, there's nothing funny, we're not doing it.
That's what I'm saying, that they cannot object
Because the
if
sale.
the listing
it's
agent.
after sale,
Yeah.
and I'm not going to steal the business. I'm
Right.
not saying that work with me.
It's just
And
giving them a gift.
even if they're buying a home, like let's like if they sold the home and if they're buying, I will not go in that area. If they come to me, it's their choice, but I will not solicit. Even I can give a disclosure on it, not intend to solicit.
But when we are giving those packet, right? Moving package, right?
Yeah.
So it is not a soliciting.
So what Rico says, like the information guide. You know Rico information guide,
Haji.
what it says. Like I'm dealing with for my client, I have to do best for my buyer. So now if the sellers are happy, they might leave some bouquet for my clients. That's all I want.
I couldn't get it.
So Rico says that I have to do best for my clients.
Okay, got it.
So, like then, like should I piss the sellers off so that my clients, buyers, they get bad service? I don't want to do it. Rico has instructed me that,
No, but my client is my seller, right? If I have listed the house,
What's
but
happening?
I'm trying to do best for my buyer or for my seller. whoever is my-
Indirect, right?
no, but Paji, I'm not able to get it, but my
That's like-
buyer is not my client.
No, let's like your buyer. Like I'm talking about here, seller is not my client, but buyer is your client.
Okay,
So you have to do each and everything to make your clients, which is buyer, is like easy.
Haji.
And if the sellers are happy, then do you think they will clean the property nicely? If they're happy, do you think they're gonna leave some flower bouquet for them?
And keep some extra stuff
Leave
behind.
them some extra stuff. Closing is smooth. And if they are pissed off, then they might leave garbage.
So, but if they can get pissed off from their own listing agent also.
So the
Anything could happen.
Yeah.
So you're saying like the deal is closed
we have no paper closing.
Before closing. Still not closed.
And second thing is they are moving, like they are moving out, and I can because the mail, so many times mail comes to, let's like my buyer bought a house on 123 Main Street, and the sellers moved out. After moving out, the seller has a problem about collecting the mail. I can be facilitator. I can ask the sellers that, okay, Mr. and Mrs. Seller, my clients might get some mail, and I will help you out. I will pick them in and will drop to your new home. What's your address? Now that address, they know me that my clients have bought because they
Because
Right,
there is a
right.
trust factor, right? So that's why they will share
Makes sense.
the address.
yeah. So that's another thing. Like think about each and every possibility what we can do, so that those clients they come to me. There's so many times it happens. I have sold a house, like it was my listing, and the same thing when the buyers were moving in, and I told them that my clients they have kept the house neat and clean, and my contact number is here. If there is any issue, you call your agent, but you can call me as well. I will not mind to help you out. So very first day they moved into the house, there was an issue with the furnace. And they called their agent, he didn't answer the phone. The second moment they called me, and I sent someone out to look at the furnace. It was $125 expense, and I asked the sellers to pay for it. They paid happily, and the buyers were happy. And after 2 years, they called me. They said, "Oh, you know what? Want to sell this home? Was moving out of the country," and I double-ended again second. This is but like I don't want to steal his business. I will not go in that area. But if they're coming to
So,
me,
like if the sellers are moving out now, right? Because my buyer has to move in, and I sent these moving boxes to the seller, right? Which is not my client. So now it's like a gift from my end to the seller, right? So this gift cannot be treated as solicitation by their listing.
no, I'm
Ralph, can you give another example? Suppose once your buyer bought the house, right? Once he bought it, so you go with whatever, like with mitayi, with it, whatever, right? Flowers, you say like, my client was living here, his mailing address changed, but still he will get some mails. I can come and pick it up anytime. You're okay with it.
So I'm not like, let's say like if the sellers call me and they say, okay, I have sent the boxes, they called me that they're asking, can you help me to find a home? And very first thing I will ask them that, are you working with any realtor at the moment?
Right.
Have you signed any agreement with anyone? Have you submitted any offer? And if they respond no, then I will get the buyer agency agreement signed, and I will register on PRS as well. I can do it. But if I don't ask questions that are you working with anyone, then there is an issue.
Right,
But let's say like if I say that, okay, well, this agent has sold the house, why don't you go with him?
Yeah.
That's not that's not good for them. That's not good for me. That's not good for my clients.
right.
So about the supply thing that you were asking, he mentioned that when you will give those supplies to them, you will also send them this note that this is not meant for service.
Yeah, and
Right.
okay. So I
Yes,
don't
yes.
want to I don't want to get someone else's
Cover
business.
ourselves.
And then after all these things, then it comes to paperwork.
Right.
But the problem is so many times, first thing we're gonna, because we like it, we're gonna start doing paperwork.
We love administration work.
We love it.
Yeah.
And the most important thing is good to show up on the closing day and get something as a gift for your clients. Leaves a good impact.
That is a very important.
This is most important thing. So, then you get the client for life. So all these things. But this is a process. But if like normal agents, the first thing they're gonna start working on the normal stuff.
Engage ourselves in the paperwork.